there was another thing that you were mentioning, Dr. Ross, and I'm curious to get Joe's takes on this since he's a lawyer, is this idea of this regulatory moat, right? And I think the big banks see it as a cost of doing business. But if you're a small bank and you're trying to compete, it's almost impossible because you're spending more on just compliance than actually trying to provide a good user experience for your customer.
Yeah, I don't have much to add on that other than the fact that that's a real thing. I mean, that's one of the reasons why we haven't had more, I think, Bitcoin only exchanges in the United States, because it's extraordinarily difficult to set up the proper accounts, the proper registrations, to get the licensure. I mean, it's so cost prohibitive. And for banks, they're one of the most highly regulated industries. You know, they're up there with insurance in that, you know, the amount of hoops you have to jump through in approval to get anything done. Even something simple. We were helping a client who was providing Bitcoin services and offering custody services. They wanted to just permit, they wanted to get the green light to withdraw Bitcoin, right? Just let customers withdraw their own Bitcoin so we don't have to custody on their behalf and they can go in and out. It was extraordinarily expensive. I'm not going to give you the exact number because it would shock you, but it was so expensive that it would say, this is just not worth it economically. We're just not going to go down this product line.
Yeah. So, and this is actually a question that I've asked Dr. Ross, but I think that as human beings, we, you know, just the way our relationship with time, we think that things are going to happen a lot faster than we anticipate, right? The reality is that this recession hasn't happened, or maybe in the mainstream eyes, is that going to happen? I've read a lot that it's now like unavoidable. It's going to happen later on this year. Why do you think it's taken so long? I think people were expecting it in the beginning of this year or late last year. Why do you think the recession hasn't happened?
Take it, Joe. Well, let me start out by giving Joe kudos, because when I was, screaming from the rooftops in the fall of 2022 that the recession was basically here, Joe's like, no, the economy is still strong, unemployment is still low. I still think it's stronger than you're saying it is to me, which was good. Kind of calling me out on that a little bit, and it's probably still not going to be here for a little while. And so, kudos to Joe for being right on that. I look more at how do risk assets perform regardless of whether or not we're in a recession. But I will say, so that's why I don't really like making recession calls personally. I don't really care. And that's not to say I don't care about the cost and the human suffering that goes on. I care deeply about that. But for my clients, and as far as, making money, preserving purchasing power, things like that, I care more, what is Bitcoin going to do? What are risk assets going to do in general? What are stocks, bonds, those kind of things going to do? I would say that the way the economy is setting up right now, to me, still looks extremely worrisome. The fact that the yield curve, you look at the three month, 10-year yield curve, and it's inverted, man, 178 basis points, I believe, somewhere around there right now. I mean, it's just ridiculous how inverted it is. Now, that doesn't mean that means the recession is going to be extremely terrible. They're not correlated necessarily. But when you look at that and you see what's going on with the banking structure, and you see what's going on with the Fed continuing to tighten into this economic slowdown. So even though we're not having negative GDP growth, we still continue to see slowing GDP growth. All of these things going in tandem with each other just portend to, I think, a really negative outcome at some point. I think at some point we still get a floor dropout moment. I think tomorrow we're recording this, Tuesday, May 2nd. Tomorrow, Jerome Powell speaks. I think if he comes out with guns blazing again and is extremely hawkish, I think they're going to raise 25 bips. But if he comes out and says, "Hey, we're going to continue raising. We still think inflation is too hot. We still think the economy is very strong. So buckle up for more hawkishness." I think the risk assets that market in general has is going to be very tumultuous, and I think that there's a chance the floor does drop out sooner than later. And then when you layer on top of this, and then I'm sorry, I'll stop talking. I want to hear what Joe has to say. When you layer on top of this the debt ceiling debacle that's coming to a head, especially based on what Yellen was saying, that the Treasury may run out of money by June 1st. This is all going to come to a head basically this month. So I'm very curious to see how things respond. I'm very bearish in the near term for risk assets, for even Bitcoin. I think Bitcoin price gets sucked down probably. Yeah, it's hard for me to be optimistic at this point. And whenever, regardless of when the recession officially hits, I think that things like stocks and Bitcoin are going to struggle for the remainder of this year, unless the floor drops out and we get a bottom in the near term. So I'm not sure if that made sense. I don't know when it's going to happen, but we are getting closer and closer to that moment. And I don't think we're going to have just kind of a soft landing where all of this just gets smoothed out and we head to higher levels. I know some prominent people that think that. I'll just throw out Raoul Paul as one guy who thinks that we're probably going to have a little bit more tumultuousness for the next month or so, and then it's just free sailing from there, and we're going to go on to higher highs. And I'm definitely not in that camp.
Yeah, and what's your take on that, Joe? What's going on here? I think a lot of people were anticipating it earlier. Are you on that? I of course, as a Bitcoiner, I'm like, this is definitely not going to be a soft landing. Why? Was it just the strength of the U.S. economy?
Yeah.
What's your take on that?
So let's go back to, again, 2022 and what I think happened. I think because this goes back to, the hardcore Bitcoin spirit here, right? Because we don't have a good money in society, I think our psyche is just conditioned that when asset prices are declining, when the stock market's down 15, 20%, people just associate that with a recession. And that messed up a lot of people last year because you saw asset prices performing very poorly coming out of 2021, which was a fantastic year. And the year before that, after COVID, was another fantastic year in 2020. But what really happened, I think, is that you had, the peak liquidity, you had the peak low rate environment, you had the peak optimism over reopening over COVID. All those things started to peak out in middle to the end of 2021. You saw this sort of rolling through the asset classes. And then you said the Fed, which was slow to react to the CPI prices, they were just starting to press their metal to the their foot on the gas to get as fast as they can to sort of catch up with the inflationary impulse, right? So this confused a lot of people. When if you looked at the actual coincident economic indicators, the leading indicators, they were still fairly robust through most of the year. And that's what I was looking at for terms of the real economy. But as Jeff pointed out, like nobody really cares about, I tweeted this out, like I think most people wouldn't actually care what happens to the real economy unless they either lose their job or their assets are declining, right? Otherwise, they just, the economy, which has been running under trend growth for the last 20 years, basically since 2000, they just say, whatever, it's fine. As long as assets keep going up, I'll get richer and richer on paper. Putting all that aside, what happened? Where are we at right now? Well, we already had sort of the liquidity tightening cycle. Okay, that's the key part. Liquidity is tightening. We've drawn for the system. Rates are getting higher. You can see this across all asset classes. You had these little bumps, right? Because nothing goes in a straight line down. Even a ball rolling down the hill tends to bounce, right? So you had these bounces of liquidity, most notably in the last quarter of 2022. But realistically, the actual economy has not yet slowed. So I think we're moving into the second phase where liquidity is being withdrawn. And then now you figure out who's swimming and who's swimming naked, right? This is the credit crunch. This is the credit contraction part of the economic cycle. And my base case is at a minimum, not necessarily a collapse, not necessarily a 2008 style recession, but a serious recession, a recession that will be meaningful in terms of the rise in unemployment. I think that comes this year. And again, these are sort of long, slow processes, okay? I don't expect this to be over with this year. I don't expect it to be over with next year. I think there's a great possibility we could be having the same conversation a year from now, talking about the recession and when it's going to be over and when are assets going to start to go higher. I don't think it's going to be a quick, easy one. We're sort of accustomed to these sort of V recoveries. I don't think it's going to be this one. I think it's going to be a grinding, slow-moving environment. And from my standpoint, I go back to the academic literature and the research, right? The research shows that when you hike interest rates, it's anywhere from a 12 to 24 month lag before those rates actually percolate through the economy. And the majority of debt from high yield needs to be rolled in late 2023, 2024, right? So these companies are going to be rolling their debts at very high interest rates relative to what they took out the loans at, which is going to put all sorts of strain on the financial system. So I think we're like in the early innings of this, and it's going to go for a long time. And the only thing I think that would be reverse this trend is if you have something serious, systemic that breaks, that forces a reacceleration of the liquidity, the ZERP, the stimmy checks, that type of thing. But honestly, I don't see that coming anywhere near in the future. So I think we're in the early innings of a recession. I think it comes starting probably the later part of this year. All the early leading indicators show the economic growth falling off month over month. Even unemployment is starting to soften ever so modestly. But again, don't get confused. Last year was not the recession. It was the economic data was robust throughout the entire year. You had 4 consecutive quarters where GDI was positive. You had 2 quarters where GDP was positive. Nominal growth was high the entire year. So you really just didn't have you had record low unemployment through most of the year. You didn't have what we typically see in a recession. It doesn't mean it's not coming. It's just going to take a lot longer than people think.
Yeah, and then also what's being talked about as well, like what I've been reading up on is this idea of stagflation as well, right? Where you have this persistent high inflation, and then potentially heading into a recession, like you said, Joe. As a country, I don't think we've experienced that since the 70s, right? And in the 70s, we had about a decade of just static economic growth. What are your thoughts on that? Is that a possibility?
I don't see that. I actually think we're heading into recession because I think that the Fed is very much resolute in their efforts to stamp out inflation. And again, they have sort of now admitted it publicly that they're forecasting a recession, right? Which many people in macro circles have known for a while, right? They're coming to the terms with finally accepting it. But if you looked at their own summary of economic projections, they think unemployment is going to get to levels where you would only see those types of levels in a recession. Right, so it's well within their forecast, and I think it's their stated or unstated goal to trigger a recession, because they know there's no way they're going to get the CPI down to 2%, which is their target, unless they trigger a recession. Now, can they revise their target? Can 2 become the lower end of their expectations and they revise it higher to 3 and just accept it and call it a day? I think that's a higher possibility than most people think. But right now, you're seeing 80% of the basket still run 2 points above where it should be. That's nowhere near where they need it to be. So I don't see them pulling their foot off the gas. And every other cycle you've talked about where they've come in and they've sort of been able to massage it through interest rate cuts or maybe stimulus checks. Okay, you didn't have the type of CPI numbers we're still seeing right now, the persistently high CPI and the easy downturn in CPI, the easy pullback. We've gotten rid of that. We've exhausted it. The last 2% are going to be the hardest, the stickiest components. And to do that, they're going to have to trigger what is more than a garden variety recession. It's going to be a painful one, I think. And what do risk assets do in that environment? That's a whole nother discussion, right? Because that's a whole separate inquiry we can get into. But I think in terms of unemployment, I expect unemployment to be going up substantially over the next 12 to 24 months.
Wow. Okay. And actually, I want to get back to how risk assets are going to perform, specifically Bitcoin, because this is why everyone's here. But before we get to that, I want to pass it on to Dr. Jeff Ross. His same question about stagflation. Do you think that the Fed is hell bent on doing whatever it takes, even if it means putting millions of people out of a job, to get inflation under control?
So yes, I'll say just flat out for that. But I'd like to add, I think that's a terrible way to address this situation, right? I think it's barbaric to try to bring inflation down by destroying demand. Because when we say destroying demand, what we mean is they want to put Americans out of work, so Americans don't have the excess spending capacity to drive prices higher, and that lack of excess spending capacity will cause prices to fall. Totally barbaric. There are other ways to go about this. On a supply demand curve, there are 2 curves, and one of them is demand and one of them is supply. I think we should be focusing on supply personally and not worrying about inflation so much personally. That's my opinion, and obviously the Fed disagrees with me. I do think when we look back in history that we will consider the 2020s to be in general a stagflationary period. I think, but like the 70s, we consider the 70s to be stagflationary, but there were lots of smaller, shorter periods within the 70s that you did not see stagflation, right? You have periods of, and I think we're going to see this decade, periods where we see deflation flat out. We see deflationary busts. I think we're at a high risk for that happening over the next year at some point, where the floor drops out under prices, under commodities, under stocks, even possibly under Bitcoin again. And inflation, I don't think is just going to go away. The one other point I want to bring up, I've been thinking a lot about this, and I really kind of hope I'm wrong, sort of. I'm not convinced the Fed is going to come out immediately with a bazooka this time around, because I think they know, and Powell has brought this up. He does not want to be Arthur Burns of the 70s. He does not want to say, okay, we finally defeated inflation. yes, the market's tanking, everything looks terrible. And what they did in the 70s is then they quit trying so hard to destroy demand, right? And so they came in with easing, basically their version of it. They pulled rates way down, and what happened is inflation just spiked again. I think the 2020s, even though it's different than the 70s in many ways, I think the 2020s is going to be marked by very tumultuous and volatile inflation in general. And so I think Powell will be loath to open the bazookas up and just be like, okay, QE infinity. I hear a lot of people saying this, and I even was saying this 6 months ago, but I'm not so convinced that that's actually going to happen. I think he doesn't want to do massive QE because they run the risk of sort of reigniting inflation again, and then just in being right back in the same problem that they were, 2 years earlier. So I'm very curious to see how he responds to this, and I'm not overly optimistic about it, to be honest. So that's a long answer to say I'm pessimistic, and I'm kind of increasingly pessimistic about the solution. Lots of people are really excited for the Fed to turn and to use all of his weapons and get QE infinity just going again. I'm not convinced that's going to happen as soon or as massively as many people think.